Hey everybody, I'm Rob Freeman and welcome back to Insuring the Built Environment. This week we're talking about an insurance term called the period of restoration. And the period of restoration is an insurance term that you're going to encounter if you have a property insurance coverage that covers business interruption. So in a recent video, we talked about something called contingent business interruption, which is a type of property insurance that covers your business if it's shut down because of a reliance on a third party that shuts down. So you can't do business because that third party is shut down. And whether it's contingent business interruption or traditional business interruption, the period of restoration is important to pay attention to because you want to know what the definition of period of restoration is. So that should be a defined term in your insurance policy, and you want to pay attention to what that is. The reason is that insurance companies will sometimes define the period of restoration in a broad way or in a more narrow way. In a broad way, the period of restoration would be from the time that you experience the loss to the time that you've been able to bring the company or the operation back up to where it was prior to the loss. But some insurance companies may define the period of restoration as a period that takes place from the moment that you notify them of the loss to the time that you're able to bring the operation back up and running, even at the most modest level. So let's say you own a manufacturing facility that manufactures all sorts of parts and different types of products and things like that, and you experience a fire at the location, so you have property coverage. You're going to be hopefully covered for having the physical damage covered, but then also if you have business interruption, you should have that time element insurance coverage to cover you for the period of time that your business has been shut down and you're not earning income. And if the period of restoration is defined or the suspension of operations is defined in a narrow way, it could be that the insurance company is only going to pay you up until you're able to bring the manufacturing facility back online in some way. So in this manufacturing facility example, let's say you manufacture all different types of products and you're able to bring the facility back online to only manufacture one of those products out of, say, 10. So you're only at 10% capacity. The insurance company might say, well, you've brought the equipment, the manufacturing facility back online, and so it's even if it's at 10% capacity, the period of restoration ends there. Now, that wouldn't be fair, right? Because you're still experiencing a 90% loss at that point. So again, you want to pay attention to what the definition of period of restoration is in your business interruption policy. And again, this is related to a video that we did last week or a week or so ago about something called contingent business interruption, which is a type of business interruption which contemplates that your company relies on another third party in order to operate, and that third party experiences some downtime because of a covered loss that's covered in your insurance policy. So again, the period of restoration is an important insurance term to know in the context of a business interruption insurance policy coverage. And yeah, that's it. So if you have questions about your insurance, please feel free to schedule an appointment with me at the link below this video. Thanks again for watching. I hope this is helpful, and have a great day.